time to do business again. It's Business Incorporated, where we have 25 minutes to give you update from the world of business. And here's what we have prepared for you. Inflation numbers for December from Nigeria is expected, and it's expected to be spiked compared to November because of the year effect. In South Africa, it's not so good for farmers. The foot and mouth outbreak is ravaging harvests. ID reforms in Kenya are supposed to help citizens access services. You're welcome to the program. I'm Ini John Mekwan. This is Business Incorporated. As usual, we start from oil prices. It tumbled more than 4% on Thursday after the United States President Donald Trump said that the killings of demonstrators during protests in Iran were ending, tempering concerns over military action against Iran and potential supply disruptions. So we see the numbers, but very big drop right there, more than 4%, 4.27%, bringing the price of Brent to $63.68 a barrel. WTI is also down 4.32%. The price is $59.34 a barrel. That's what we've seen at this time. And of course, it's because mostly of the geopolitical factors which we see. President Donald Trump's remarks have reduced expectations of a potential U.S. attack on Iran. And prices fell after Trump said that he had been assured that Iran would stop killing protesters, and adding that the immediate risk premium had softened, but it's likely to go away. The United States is withdrawing some personnel from the military bases in the Middle East, according to a U.S. official, after a senior Iranian official said that Tehran had told neighbors that it would hit American bases if Washington strikes. And then we leave the oil space now, see what's happening with metals. Gold prices eased on Thursday following a record high in the previous session as geopolitical and trade risks receded after what President Donald Trump said. So let's look at the numbers. We see spot gold 0.3% in the red, $4,621.20. Spot silver is also down 0.27%. $91.10 per ounce. Platinum, almost 1% down. Palladium, 2.32% in the red at $1,858. Copper is 1% down at $5.955. And of course, it's all connected to what President Trump has said would be happening. Now we come to Nigeria. This morning, Ladi had a conversation during business morning on that VAT, 7.5% VAT on bank transactions, a lot of bank transactions. So we decided to share that with you. The implementation begins on Monday here in Nigeria. But let's tell you a little bit of what to expect on transactions such as banking fees, transfers, e-transfers, even your POS transactions also would be captured.
There is an apprehension, a potential misunderstanding that the 7.5% charge is on the principal amount that is being sent or received, and everyone is worried. Oh, government is going to take 7.5% of what I sent. Not exactly. It is 0.075 multiplied by the bank charges which you have done. So on a 10 naira, on transactions below 5,000 naira or thereabout, the additional VAT charge is 0.75 naira, which is less than 1 naira. So it's not like, oh, there's an earthquake that is happening. And if you send between 5,000 and 25,000, where the bank fee is 25 naira, 0.075 or 25 naira is going to be 1 naira 88 kobo. And on 6 naira 98 USSD is 0.075 by that, which will be maybe like 40 or 50 kobo. So in essence, I think we need to calm down with better communications by ecosystem players, regulators, and the financial system players to calm apprehensions down.
And that begins on Monday. Now, in Kenya, the Energy and Petroleum Regulatory Authority has announced new fuel prices, cutting the pump price of petrol, diesel, and kerosene in its latest monthly review. The body says that the reduction follows a decline in the landed cost of imported fuel, supported by softer global oil prices and lower shipping and insurance charges, beg your pardon. The new prices take effect immediately and apply across major towns, including Nairobi, Mombasa, and Kisumu. The regulator notes that the adjustment is aimed at easing the cost burden on households and businesses, particularly in the transport and manufacturing sectors. Lower fuel prices are also expected to help contain inflation and in the economy. Still in Kenya, the government has unveiled additional reforms to its national identification system, aiming to make it easier for citizens to access government and private services. Under the new measures, the National Registration Bureau introduces streamlined procedures for applying, updating, and replacing national IDs. Officials say that the reforms target delays in processing and verification, ensuring more citizens can obtain valid identification quickly. The government notes that national IDs are critical for accessing social services, banking, healthcare, and voting, and the reforms will enhance efficiency and security in these processes. Digitalization of ID services and integration with other government systems form a key part of the initiative. And Mozambique signals plans to engage in debt negotiations following the approval of a new program with the International Monetary Fund, as the IMF, as investor sentiment pressures its sovereign Eurobond. The government says that the IMF program would provide financial support and policy guidance to stabilize public finances, but officials acknowledge that there's a need to discuss debt sustainability with international creditors. Analysts note that the move is aimed at easing repayment pressures and securing a stable fiscal path. Meanwhile, Mozambique's Eurobond prices slip amid cautious investor sentiment, reflecting concerns over the country's high debt levels and external vulnerabilities. Market watchers say the combination of IMF engagements and proactive debt discussions could restore confidence if implemented effectively. South Africa's Minister of Agriculture, John Steenhuisen, is calling for the declaration of foot and mouth disease outbreak as a state of disaster. This is as farmers across the country continue to bear the brunt as the disease is spread. So far, the government has vaccinated about 2 million animals. He says that during a briefing with the media in Pretoria, the current status of foot and mouth in the country, and then the department plans to spend at least 1.8 billion rands to fund the vaccination drive. Our South African correspondent, Innocent Samosa, has more.
2 million animals have been vaccinated over the last year as the outbreak ravaged livestock farming in 5 provinces. This week, Minister John Steenhuisen announced the first phase of a strategy that aims to reduce outbreaks by 70% in hotspot provinces within the next 12 months.
We see your struggles. We understand and acknowledge the financial as well as emotional toll that outbreaks like foot and mouth disease have on you, on your families, and also your livelihoods. We remain deeply sympathetic to the hardships that you have endured.
South Africa lost its FMD-free status in 2019 after failing to keep up with local vaccine production. Steenhuisen said that he can't undo the past and the decisions that led to production virtually grinding to a halt.
I want to be honest and upfront with the nation. Achieving FMD-free status is a monumental task that is not going to happen overnight. It is a process, it is not an event. Our strategy that will be dealt with today by Dr. Magajani will be a strategy phased over 10 years.
Meanwhile, analysts have welcomed the move.
The Department of Agriculture's decision to vaccinate all cattle in South Africa for foot and mouth disease is a welcome decision, because foot and mouth disease has actually been a major challenge for South Africa, and it seemed that whenever we pass one area, it spread to the next. And remember, as a country that wants to ensure that we build our red meat exports, so biosecurity and controlling diseases remains a priority. So with the step of saying we will vaccinate across the country.
But he cautions that this will not be an easy task.
It will, of course, be a major undertaking, because as a country, we have a cattle herd of over 7 million. The logistics of doing this, and secondly, the logistics of getting the vaccines is going to be another challenge. And the department did indicate that they are reviving the Agricultural Research Council's capability to be able to produce the foot and mouth disease vaccine in South Africa. But at the start, we will have to be importing some of this.
Now he's looking to Argentina and Turkey, from which to import millions of doses of vaccines, with the aim of reaching 80% of cattle populations within a year. From Johannesburg, South Africa, Innocent Samos, Channels Television News.
And still in South Africa, the country has officially been removed from the European Union high-risk list. This is following the removal by Financial Action Task Force late last year. South Africa was added to the list in 2023 because of grey listing by the FATF. Countries like Mozambique and Tanzania are among 5 countries delisted. Cybersecurity analyst Lucien Pierre says that this move is expected to boost trade and investment with the EU.
There will be benefits for South Africa that arise from this. By way of background, South Africa was added to the EU's high-risk list when it was placed on the Financial Action Task Force list, or FATF as it's known. This is a list that identifies countries that have weak laws on anti-money laundering and combating of financing of terrorism. Being on that list means that because of these weak laws, criminals, including cyber criminals, of course, could take advantage of weak systems to transfer the proceeds of cybercrime to other countries where they can more easily launder their ill-gotten gains. So, it also means that countries that are on this list had to be viewed with more skepticism by countries that were dealing with them, which slowed down transactions, slowed down deals with other countries, and generally just made things a little more difficult. Of course, now that we are off the list, it may become more difficult for cyber criminals to conduct cybercrime, not in terms of the actual attacks, but rather in the way that they go about transferring their funds. Because we have a higher level of scrutiny and higher and better systems in place, it's going to be more difficult for them to move their money around and to launder it. So there certainly are benefits that come with being removed from the list.
And then we head to our commodity space today. A commodity of interest today is smartphones. Well, of course, we do not need the definition from it. I'm sure you have one even as we speak in your hands. And as with every other thing, we did see a surge in the price of smartphones, especially in a country like Nigeria, where it is imported into the country. But in spite of that surge, for instance, the financial derivatives company have found that an average price of generic smartphone rose about 66% from about 90,000 in 2024 to 150,000 by December last year. Despite this, the market recorded a 29% surge in the third quarter. So people are not discouraged. I'm talking about the factors driving that increase in the price. So most of it will be what has happened to the value of Naira. But we have Favor. Favor Adekule is an analyst with financial derivatives company, joins us now to tell us what she's found out or what financial derivatives has found out about this increase in demand in spite of an increase in price. Favor, good afternoon. Welcome to the program. What's driving this?
Good afternoon, Nini. Thank you for having me. So like you said earlier on, we have seen a surge in the price of smartphones by about 6% year on year. And a lot of factors contribute to the increase in prices. Number one being that the components that are used in making these phones prices are getting, higher than usual. We have lithium, copper, cobalt, among many others. These are critical minerals that are used in making phones, right? Lithium is used in batteries. Copper is used for the wiring in phones, and not just phones, electric vehicles. And we even see where the world is tending to more towards reducing carbon emissions, right? So the prices of these things are increasing because they are in high demand. Copper, for example, reached an all-time high of about over $13,000 metric per metric ton. So yes, those inputs that are used in phones are getting expensive. Another factor is the import duties that are paid on these phones when they are brought into the country. The producers bear the cost, which is eventually passed on to us, the consumers. We also have technological advancements. There are new variants of phones with upgraded versions, like better camera qualities, better phone storage, better internet connectivity, like 5G phones, and the likes. So I'll couple the fact that there's also the exchange rate as well, exchange rate volatility fluctuations in the Naira. So these factors have caused the increase in the price of phones, but we still see that Nigerians are still purchasing, these phones, right? So this is because these days a lot of Nigerians are going for more of used phones, UK used and refurbished phones. And there are also, payment systems that help to spread the payment of these phones like across a particular period of time. So yes, I would say that this is why we still see the demand for phones, and we need our phones to do a lot of things, business work, phone is highly needed in this life today, in our day-to-day activities. So
Yeah.
yes.
So looking at the future trend, Favor, we know that with the tariff war also come the war around critical minerals, lithium, copper. You talked about copper, silver, gold, and these are raw materials for chips, memory chips, and also that make up these phones that we're talking about. We know Nigeria has mineral resources, but adding value is a major one. What trend can we expect with the chip war going on, especially between the US, Europe, and China, and we on this part of the world who are using this? What trend can we expect in the pricing, in the supply of smartphones in the nearest future, beginning from 2026?
Okay, so yes, you're very right that there's this war ongoing concerning rare earth minerals. And as you rightly mentioned, it's in high demand. Um, China, we see that they're making electric vehicles, a lot of electric vehicles, and the renewable energy of reducing carbon emissions. So a lot of countries are after this rare, earth minerals. We also see that, in fact, there's an AI boom, right, in a lot of tech companies, and memory chips are vital in the building of these AI data centers, because a lot of new things are coming about. And memory chips are also important in phones. They are used in phones, laptops, and the likes of them. So the price of these phones are not going to come down anytime soon. There's going to even be a further surge in the price of phones. The major thing, the AI boom, right? As I said earlier on. So there's a high demand for the lithium, the copper, the gold, the likes. So yes, there's not going to be a decline in price of phones anytime soon.
All right, thank you so much, Favor, for giving us updates from what's going on with the smartphones and what to expect in the nearest future. Favor Adikule is an analyst with Financial Derivatives Company.
Thank you for having me.
Let's head to the markets now and see the positive news still going on in Nigeria's equity market. We see it at intradays up 0.14%. 167,012.90. The sentiment spreads to Johannesburg, where it's also positive 0.12%, and it's crossed over to 121,000 level is what we see for Johannesburg. Still in the African markets, we see what's happening with Egypt. That looks even better at 2.30% intraday, 44,050.05. It's a green one totally for all the major markets in Africa, because even Nairobi closed positive 0.09%. Moving away from Africa, we move to the Middle East. It's a flip for the markets at the Middle East. Dubai is negative 0.26%. Abu Dhabi is also negative 0.06%. Saudi Arabia is negative 1%, and Qatar negative also 1.30%. So it's all negative for Middle East market, while for US stock futures, we see there has gone up as at least a bit of ease there, especially coming from looking at the comments of President Trump concerning Iran. So we see the Dow at 0.09%, S&P at 0.31%, Nasdaq 0.71% in early trade. Those are the features. Chip stocks led the way higher in early trade after Taiwan Semiconductor reported another record quarter. Also going to Asia, at the close of trade right there, it's mixed. Nikkei of China is negative, and so is Hang Seng, but Kospi skipped that and is 1.58% in the positive. Let's see other markets right there. Shanghai and Nifty 50, they're also positive. So it's a mixed one. They're mostly red for the Asian market. But let's see what's happening in Europe. And Lars Halter joins us to give us updates on that. Hi, Lars. Good afternoon. What's happening in the markets there? So, Lars, I cannot hear you. I think you should unmute. I don't know what's really going on there, but I can hear you, Lars.
Okay, let's see if
Great, I can hear you now.
Fixed it now.
Yes, I can
think
hear
I
you
get
now.
better feedback now. All right, let's try this again, Ini. We have indeed a mixed picture here as well, with the FTSE in London up by about 0.5%, but we have most of the other indices down. One of them, of course, is the DAX in Frankfurt. That has been quite a run over the last couple of days, now down a fraction. However, there's some good news about the German economy. It's grown last year. Official numbers just came out earlier this morning, with German GDP growing 0.2% in 2025. As expected, well, it's not a lot, but it puts an end at least to 3 years of recession and a stagnation. But of course, it's also not a number that could in any way move markets in a major way.
Yeah, it does seem everybody's talking about China's trade numbers. In spite of all the disruptions, especially coming from US and the tariff, we still saw great numbers from China.
Indeed, and I gotta tell you, Europe and particularly Germany are actually playing a major role in all this, because as China's trade with the US has indeed dropped steeply, of course, after Washington has levied those steep tariffs on the country, China's trade with Europe has skyrocketed to a point actually where exports to other markets have actually grown so much that it more than made up for the losses in the US business, and we are now seeing China's net exports actually up 5.5% for this past year. At the same time, China is importing a lot less, which of course explains the imbalance here. Beijing seeking to replace many imports with products made in China. And together this all leads, of course, to this record surplus. Now, Ini, for some concrete numbers, looking at Germany, Chinese exports are up over 10% for the past year, while Chinese imports from Germany are actually down a little over 2%.
I wonder what Europe can do to balance this trade.
Yeah, that's a good question. What can they do to balance? They will have to likely put up some guardrails too. Definitely, they are talking about it in Brussels right now. The European Commission will have to consider not only adjusting its trade policy, but maybe even changing it entirely. More and more experts are saying that the EU needs to levy tariffs too, work with import bans even on a certain products. So that would basically, if we're really honest here, it would be the end of free trade as we knew it, and it would be the end also of a decades-long policy that actually made Germany one of the world's most successful export nations. Free markets were a boon to the industry here. But as the forces have now shifted, and given the fact that we're not dealing with a level playing field around the world, economists are arguing that we have to change the rules, not become entirely protectionist, but as I said, at least to put up some serious guardrails. If that doesn't happen fast, many economists argue, China's strength could cost Germany's industrial sector at least another 1% of its entire value until 2029. And it would also mean that unemployment here would likely be on the rise.
All right, Lars, thank you so much for that info.
Thank you, Ini.
All right, we're out of time now, but just to tell you some headlines in crypto, South Korea set a 5% cap on corporate digital assets investment. That's one story. The U.S. Senate has delayed crypto market structure bill, and also Russian lawmaker is calling for tighter crypto control. So it's another control and regulation year for crypto here in this part of the world. Well, that's it on Business Incorporated. Thank you so much for being a part of it. I'm Ini John Mekwa. Bye-bye.